Please read this disclaimer carefully before proceeding further. Welcome back, traders. Happy New Year. Hope you had a good time. Hope you had a lovely time with your loved ones, and hope you enjoyed your downtime from the markets and you're getting ready for 2021. I'm sure for most of us, 2020 was a very enjoyable trading year because there has been a lot of volatility, and that gave us very good opportunities in 2020. But in 2021, it's going to be even better. But we need to make sure that we start to learn and we start to tackle all the issues which are pulling us behind, which are keeping us from achieving the best of our potential. So New Year resolution for 2021 should be that you are going to overcome your emotions. You're going to become a better trader by looking at the markets as a psychology machine. So you will start working towards your trading psychology first, because remember, 80% of the market, 80% of this entire trading or investing game is actually psychology. So you need to work on that, and you need to learn how to trade the markets properly. You need to have a consistent strategy, and you need to follow that consistently, and that is going to give you even better results in 2021. So to kick this thing start off, let's start with DXY as usual, dollar, king dollar. Now in 2020, obviously the market actually fell down pretty hard. It has been near about the whole year since the corona issue. The whole year it has been going down in multiple waves. 1, 2, 3, and this was the fourth one. It kept on falling, and it kept on falling all the time, and that's why other currency pairs and other markets have been going up, because so far, directly or indirectly, everything is still dependent on dollar. So that's what has been happening. Other markets have been going up, and dollar has been going down. Now remember, this is the start of the new year, start of the new month, and the start of the new week. So a lot of things can change. So we'll have to revise this analysis again after we have seen how the market has behaved in 1 week's time. But just to update you on the previous analysis which you have been looking at for quite some time, is that market has been actually coming into our zones. So if I go back and look at this particular zone, we were expecting market to go up into this zone, which it did, not around here, a little bit before that, and this was again a gap. So market came here to fill that gap, and you see this sort of price action is actually not looking good. This is like a push kind of price action. There was low volatility, low liquidity, there was low liquidity here, and the market was just trying to just be there, be at some level. So it was leaving all these gaps, and at some point in time it was coming back to fill those gaps. There's another gap here left, there's one here left. So right now what you can see, that this whole price section is actually not a very good price section, and at some point in time the market may decide to go and clean this entire thing. So that's what you should be aware of, and that can happen at any moment in time. So we'll have to just wait, watch, and then take the action based on the price action. Right now what we can see, that market has come back into this FCB zone. This should give us a good indication where the market wants to go. But even before that, because I'm looking at 4 hour, even before that, if I go to the weekly time frame here, this is looking actually a very bullish pattern here. Right now this was a bearish movement, and this was a candle which was showing us bullish momentum, but it never actually worked out. This is also a bullish pattern, this is also a bullish pattern, and the combination of these three is still a bullish pattern. So I'm expecting next week to have some bullish movement upwards, but we'll have to obviously see how the market opens, because it's a little bit too early how the markets are going to react when they're going to open tonight. So we'll have to wait and watch. So do not jump into the market, because the real analysis, the real market behavior will be available to us only after a week or so. But just by looking at this candlestick pattern, this is expected to be bullish. Next week is expected to be bullish, and if I look at the daily time frame, that is also looking bullish. This is most probably a kind of divergence sort of thing. So let me actually bring in RSI. Yes, there is a huge divergence setting up right there, and that's why market is expected to be bullish on DXY as well. So that's what we can see here. If I go to the 4-hour time frame, this is looking like an M pattern here, an extended M pattern, and in our group, in our Discord group of students, we were able to just see, like, how this market was going to go upwards. So this can continue, but again, we'll have to just wait and watch how the market opens for another day or so. Maybe market will just keep on going up and down, who knows, so we'll have to just wait and watch for some time before we start to plan any kind of trade. So if I bring in original analysis here, so we are back in this FCP zone, and if the market actually gives us any kind of bullish confirmation, then we can go for that, and this is going to be something like this, filling that gap, and if it continues, then it is going to come into this level of 90.59, and then we have next level around here, which is also a gap filling sort of level here, and once the market has filled that up, then we expect market to go into that FCP zone. So that's the bullish scenario that we have got. On the bearish side of things, what we can do is we can come down to 1 year time frame. So ultimately, at some point in time, this may actually fall back down to this level here, which is going to be near about 87.7 level. That's quite a possibility. And if it starts to move up, then it can go up to near about 91.6 here. That will be the first one. But if I go back to the daily time frame, why I've been saying for quite some time that the market may actually go back to 94, 95, 96 area is because of this reason. Let me just quickly close this. Okay, this is where these moving average clusters actually lie, and that is near about 95. So if and when market starts to move and it picks up momentum, then this can be reached, and that can happen this year as well. So you'll have to be very, very careful how the market actually behaves. You need to keep an eye on this. So that's what we have. But let's just looking into the next week, it is supposed to be bullish, but we'll have to see how the market opens. So that's what we have on DXY. Okay, and that's about it for this analysis. Thanks for joining me here, and make sure that you hit the like button and subscribe to this channel. There'll be a lot more content coming in. I have big plans coming in for 2021, so you need to make sure that you do not miss any of that content by subscribing and keeping the notifications on. And you are welcome to join our free Telegram group as well, which you can find the address of in the description of this video. Right, I'll see you in the next one. Have a good time. If you're interested in learning how to analyze the markets the way I do using Fibonacci Confluence, then head over to Vikinsa.com, and under training section you'll be able to see Core Strategy Training Program. On this page you'll be able to see the testimonials of previous students and also look at the brochure. The brochure has a lot more information, including the course structure and the Fibonacci Confluence Training Program curriculum. This is a very extensive program in which we cover basic core Fibonacci concepts along with the advanced concepts to analyze the markets with high probability. If you're interested in joining this program, come to Vikinsa.com, and under training section you'll be able to see and submit this form.